All right, guys, it's Paul Singh, the Market Speculator with bullsonwallstreet.com. Today, we're going to talk about three tips to trade oversold markets or markets that are selling off. And tip number one, probably the most important, is to remain patient. I know that sounds boring, but you do not want to overtrade when the market is selling off or becoming oversold. Um, these periods are when traders usually get crushed. They tend to give back more of the gain than they should. For example, a lot of you traders here made a bunch of big profits all the way up, and this sell up off, which is only taking away about half the profit since, say, August, you end up losing all of that profit or even more of that profit. And you don't want that to happen. What usually happens is during this period, we start over trading, we start taking bigger risks, and we lose more than we should. So we need to remain patient, but we need to be predatory. We need to wait for that spot to aggressively play the next big move when we get a good market signal. So patience, but then aggression when we get that move. So tip number one is patience. Don't overtrade. Tip number two is mark all of the key support levels and watch how price reacts to those levels. So for example, we are getting very oversold right now, but the oversold condition itself is not enough for us to enter today. We need to know where key support levels are and how the market could react to those levels. So when we look at SPY here, we had this big move down, but we are kind of in no man's land. This isn't a spot to take a shot. But if you know where those key support levels are, then you're going to be ready to take a shot. So for example, with SPY right now, there is converging support. The easy spot to see is the 200-day moving average, which is a key level. Look, last time we sold off just a month ago, we went right to that level and bounced. So if you took that shot here, you probably lost on the trade. But if you knew to wait for that 50-day moving average, 200-day moving average, which converged with an old high here, so you had converging support levels, that was the spot where you could have played the bounce. And the same thing's happening now. So we know where that 200-day moving average is. And look, when I draw this line, where this line goes to, it goes right to previous price action, the November all-time high. And we've had all-time highs since. But this is a key level. This is where a lot of support is, where a lot of people have bought and sold. So if we do get that level, we could get more buyers coming in. So keep that in mind. Support level here is the old November high, which corresponds with the 200-day. If we get a pullback here today, if the market tanked, which it's not right now, but more likely next week, if we test this level and then start to show strength, remember that we need proof that it's bouncing at that level. But if it starts to show strength like this candle did here, that's where we'll get aggressive. That's where we take that shot and manage our risk well, obviously. So point number two here is know where your support levels are and watch the price action as it comes into that support level. Number three is you want to pay attention to market breadth. You want to see that the overall market is reacting well. Also, there are many ways to take a look at market breadth. Two ways I use is one, I look at my own watch list and you can see how ugly the watch list is right now. Everything is red. But if the market starts to bounce and you look at your own watch list, which is going to be made up of the best momentum stocks, if they are keeping pace and beating the market, that's a good sign. You know the bounce is going to be strong. So pay attention to market breadth. You can look at it that way. Another indicator I like to use is on TC2000. We've got the T2108 indicator. And what that will tell you is the amount of stocks above their 40-day moving average. If you see a strong bounce in the T2108, that also will be a good indication that it's a broad-based move, that the entire market is bouncing. So three things to pay attention to during market sell-offs are key support levels, market breadth, and number three, remain patient and wait, stock those market signals. All right, guys, so trade well. It's a tough market to trade right now. Keep these three tips in mind and you'll be ready for that next big market move.